Nkem, thank you for joining us today. Let's start with you, just sharing your perspective on how trading played out at the fixed income market this week.
Thanks for having me. In the Treasury bill space, there was little activity observed from the start of the week, and this was basically because market participants were still dealing with reduced system liquidity that came in from CRR debit that happened at the end of the week. But despite the insignificant system liquidity figures, we basically saw that there was a bullish reaction in the OMO and the NCV space. This is because investors basically anticipate further decline in rates with the expectation of bills maturity coming in. Also, following the directive of the CBN, which effectively lowered the cost of funding deposits to a minimum of 1.25, we witnessed demand by financial institutions across the curve. So we saw demand in the mid-tenor papers and also the long-tenor papers. There was an OMO maturity on Thursday of 321 billion, which came in. That also fueled buying in the secondary market. At the OMO auction, the CBN offered 100 billion and sold 100 billion. They dropped rates on the shorter end of the curve slightly to 4.86, whilst they've maintained rates for the mid and the long end. In the bond space, we saw mixed sentiments all week. It started off on a bearish note where we saw sell-off due to the fact that there were no significant bids. But however, it turned bullish later in the week. And this is, again, the same reason for the bullish sentiment in the Treasury bill space. Investors anticipate that there would be a lot of liquidity coming in. So this led to them buying up in the short end and the long end of the curve. So consequently, because of that,
okay, let's wrap things up for the fixed income. Go ahead, please.
Yeah, so yield is basically just depressed in the bond space by 7 basis points across the curve.
Okay, so I wanted us to wrap things up with the fixed income market before we go to FX. What's on the radar next week for the market, and what events would investors be watching?
Okay, there's an NCB auction tomorrow. There's next week, sorry, and there's also OMO maturities. So we have OMO maturities of 398 billion, split between NTB and actually OMO, coming in next week. So basically, investors are just going to be looking out for the liquidity coming in, and it's going to be a liquidity play. If you're going to see that liquidity flowing into the market, and there would be buying sentiments there, and that would further push yields lower.
Okay, let's move on to the FX market. It's been quite an eventful week for the Naira this week. We saw it rising sharply against the dollar, especially at the parallel market. And we did see the CBN selling dollars for the first time to FPIs, I think, since late March. But just share your perspective on the journey of the Naira this week and, of course, how that shaped investor sentiments towards the currency.
Yes, there were a lot of major changes. We anticipate the resumption of FX sales to BDCs. And just because of that anticipation, we're basically seeing that activities in the parallel markets have improved. We've seen parallel market rates strengthen, and that's because there's improved supply from speculative traders who earlier had been trading on the dollar speculatively. So we saw that in the parallel market, rates fell to about 430, which is 50 Naira stronger than where they were previously, about 475, 480 levels. In the INE space, yes, the CBN did intervene 3 times this week, and because of that, that also helped the parallel market push rates lower. However, the FX market still is under a lot of demand pressure. So the market still realizes that despite the fact that the CBN would be resuming sales to BDC, and they have started selling INE, the unmet demand is still a lot, and the supply in which the CBN is currently supplying to the market might not be enough to meet that demand. So we expect that in the short term, Naira would probably continue to appreciate in the parallel market, but that it all depends on how much the CBN has to continue to actually supply greenback.
You know, Nkem, as long as there are multiple exchange rate windows, that is still an incentive for round-tripping, rent-seeking, and arbitrage. Now, I know that the CBN has taken a number of measures to help close that gap and, of course, keep out, at least minimize the activities of speculators. How much time do you think the CBN can buy for the Naira right now, while, considering, taking into account demand and supply dynamics and oil prices?
Well, just given the fact that the CBN would be under a lot of pressure. Reserves are declining. Oil prices are not particularly at the highest levels, and we've noticed that demand for oil products have also reduced. However, just given the fact that we're seeing a general improvement in the global economy and that gradually businesses are beginning to open, and coupled with the fact that we're going into winter season, I believe that we would probably start seeing an increase in our oil revenue, and that would help beef up with reserves, and that would give the CBN room to continue to provide stability for the Naira.